Okay, guys, good morning to all of you once again. And this is KEL, and let us go to the 28th of March 2025 Crazy Market Talk with KEL. All right, so let's go into the charts right now. Okay, guys, you see my chart? Can you see it? Let me know. Can you all see it? Yes, can you all see it? Okay, so let's go to the chart right now. This is the dollar index chart versus the gold chart. Yeah, let me just show you now what's happening in the market. Okay, so you can see that gold is moving up in a very strong fashion, all right, because it had broke the KCL at 3056 and it's now trading much higher. KSI is green, KCX is black, sorry. So basically everything is moving according to plan. Now, interesting is that we do see that the US dollar has also been going up the last few days while the gold price went up. So it seems that the dollar itself has no impact towards the gold market, and this is something crazy. All right. You cannot hear me clearly. You need to turn on your microphone a bit louder. Yeah, I think how about the rest? Can you all hear me loud and clear? How about the rest? Can you all hear me loud and clear? Yep. Okay, maybe for those not in Singapore, you may need to do some adjustment to it. It's all on the volume louder. Yeah. Okay. All right. Those in Singapore seem to be okay. All right. So just to continue my sharing, don't worry, is this on recording? So we can show you the video later on. Yeah. Okay, so I was just saying all out, right? So the question is this, Cal, what if, okay, you take a look here, what if the gold market actually pulls back down? Then what will naturally happen? Well, if the dollar actually do come down this way, gold will definitely go even higher. Now, the reason why the dollar is going up recently is because that there is a chance that the Federal Reserve, not cutting rate in the near term. All right, so there is a lot of thing going on right now. Some say it will cut in soon, some say it will cut later. But every time when the federal say they or the main people marketing that it will cut later, the dollar actually has to go higher, right? Because cutting the interest rate will dampen the dollar itself. Yeah. So that's the reason why you can see gold is moving higher, and plus also the current situation right now, where the U.S. economy seemingly not doing that well. All right, that caused a bit of recession fear, and of course, yesterday we saw Goldman Sachs uplifting the target to 3,003. Now, the thing is this, guys, I really don't bother by who upgrade whatever, because usually all these upgrades are all a lot of BS stocks, all right? Just like they say S&P will go to 7,000 early this year, but because of the tariffs now, many of them mark it down to below 6,005. So you see, guys, this sort of analysts every 3 months, they look at what they report and then what they write, and they tear away, throw the news in the dustbin. So we just had to follow through. Above OP, we just follow the buy signal. Below OP, we follow the sell signal. It's as simple as that. So I believe that the US dollar will come back down to 103.30 in the near term. So that will give me basically about 100 pips, right? So mathematically, how does it work? So I'll show you now right here. You'll take a look, yeah. This is the dollar index at 103. Okay, I cut away the decimal point. This is the dollar now at 104.50. Okay, this is how it works like. So this one was about 18 March. So 18 March itself is somewhere around here. Okay, get an idea? Okay, so you can see that despite the dollar was going up itself, right, the gold also went up. All right, that is a very strong positioning. So from here itself, we look at it, it's about 3,000. So you can see this is 3075, 70 being easier. So about 70. So basically, right, about 150 pips upside on a dollar, gain about 70 points on the gold side itself. So of course, mathematically, if the dollar is to go down by 150, example, back to where we started, then gold will go up by another 70 to even double impact. So for gold itself, right, it is possible for gold to see 3 0 sorry, we can see gold going up to about 3150, or if we go even crazier, we can see 3200. 3,200. Okay, 3,220 to be precise. Okay, now remember the number I gave you was 3,150. So that is my personal target for gold if the escalation continue to go higher. 3,150. All clear? If all clear, can text number one right now in the comment box. Now, this calculation itself, right, you may find it curious because I'm using a dollar upside versus the gold upside. Normally, is they use a dollar downside to calculate the gold upside, right? Yeah, but I was just thinking out loud itself, right? By the dollar going up, the gold should have come down, right? But it didn't. So it should tell me that there's a very good chance of the opposite direction happening. So you can consider using this factor here. Okay. All right, so that is the goal with the fundamental with the dollar. Let's look at the day chart itself. Well, we are at all-time high, so there's nothing much more for me to say. Let's go to the 5-minute chart, shall we? Now, yesterday we do a revision on gold. I think that video is very, very important. Please spend some time to watch it. It's about 7 minutes only. Just watch it. It should be very helpful, yeah? Okay, so let's start the day with the gold market. Let me just go through this whole thing one more time. How would you trade it this morning? Now, I told you before many times, the first 3 hours of gold, don't trade, don't trade, don't trade. So don't know how many times video must I repeat this. Only on Monday morning, then you trade gold. Okay, first morning from the morning 6 a.m. right to 9 a.m. normally gold don't really move much. All right, so this is about 1 hour, about 2 hours. Okay, so this is where the market move about 8 a.m. So first of all, there is a diamond, right? So you just have to put a line across it. And then because the diamond is so small, right, you cannot really put it here, stop loss, you can put somewhere here as a stop loss. But the point is that this is the range of the stop loss. And you can see that when gold move up from the white line, it usually will pull back down a little bit. And this pull back down is so critical. You can utilize it, guys, to your advantage. If the market stays above the line, it will usually go up. And of course, the first target on your screen is pivot 1, which the market really goes there. And you can see once the market touches the pivot 1, immediately it pull back. Can you see that? So that's why the system model is incredible. Now it tries again over here, and again you can see it touches a pivot but still couldn't go higher. So again, it tells you that our pivot is really a standalone factor. Now it's only when I notice that the KSI has all the way been green and KCX has been black, so I know that gold will still move higher. And truth be told, when the market break the pivot 1, which is a very classic buy signal denoted by the blue arrow, it's a buy. That means you can add position here. So the first target will be KTR +1, right? And amazing again, guys, look at it. The market staggered nicely, but once you go to KTR +1, notice that the market hit a long candle downwards, as if that the market no KTR +1 exists. Or can I say that it seems like what the rest of the whole world also no KTR +1? Do you think so? Not possible, right? Okay, never mind. Then after about 10 minutes later, you notice that the gold again stay above KTR +1. And this is what we know. When the market purposely close above KTR, the next one you go to the next KTR. And truth be told, the market rebounded at the KTR +1 and move up like this, what we are seeing right now. So the thing is this, where is gold going to go, right? Very simple. It's not too difficult. You notice that there is a KTR +2, which is somewhere around 3080. All right. So basically now, if gold is to trade higher, there is a possibility to see 3080 traded. Okay, all clear? If all clear, type number 2 right now. Now, some of you say, KEL, the video that I send every morning is good because it's short and concise. This one a bit longer. Of course, but there's less interaction, ma. Do you want interaction? I think you want, right? I think that'd be better, right? Okay, let's look at the NASDAQ. Now, the NASDAQ last night pulls back, all right? Pulls back, and we can see that it was because it was a CCYR, and that is a is KSI been red. Oh, no, where's my KCL? Let me just try to refresh it up. There we go. Yeah, see, the KCL should be there. KCL 19894, which means that when you draw a market closes with the KSI rate, there should be a line. So you can see a green color line somewhere around here. So as long as the NASDAQ don't go above 19894, doesn't go above this level, I believe the NASDAQ will fall further. Now I cannot believe that, right? The NASDAQ can go back to 19284 in the near term. Of course, the nearest KCB is 196,688, but I think this market will bring it down to the level easily. So 19284 will be my personal target. And of course, if you look at the 5% rule, let me just show it to you right now. Let me find it for you. Take the NASDAQ and I put it in. You can see that how the 5% works here. Okay, so the highest point was 22,226. Then it slammed down, stopped at 95% for a short while, resumed the next 2 days, and went all the way down to 90%, and then stopped there. Okay, so the thing is this. Now, by right, the next level should be the 85%, but of course, 90% is a very strong rebound area. So the market rebounded. Okay, now everybody watch out here. For those who love Fibonacci, stand by. So let's do a hypothesis. Now, so by right itself, I kind of suspect that the market may actually go down further to 18894, 892, may go there, yeah, possible. But then the thing is this, now it rebounded, right? So where's a breaking point? So Fibonacci, just do the simple thing. You take the Fibonacci icon over here, text push, and you get it up. Okay, I change my color first, yeah? Because it's meant for white color this is for black color background. Can you see that? Yes, we are now very, very importantly close to the 50% mark, which is somewhere around here. And this number is about to this low. It's about 19750 around there. Okay, 740, sorry. That means that it shouldn't be 40 hold. So it should be 30. Okay. So 19730 is a very, very important 50% mark level. If the market basically breaks below 19730, then I can tell you that my fear for it to come back down here, which is very, very high, and that's 19,100 series. Yeah. So where are we right now? We are at 19790 series. So for it to come down to here, it'll be another 600 points movement. So is it possible? Let me know in the comment box. Yeah. Okay, so that is the NASDAQ to show it to you. Okay, so let's just move on to the next market, and the next market will be the Dow Jones. Now, Dow Jones, I know some of you were very frustrated yesterday. The Dow Jones came down, but then it recovered. You must understand the KSI has been green color. So that's the reason why when the market hit the KTR, it actually rebound. I'll show you in the revision later. Yep. Okay, so what is here for? Now, the thing is this. Today is a DJDD day. Buy right is a strong buy day because it's above MLP, KSI screen, so all is good, right? But if the market do break below OP, then be very, very careful because you notice that the MA30 is 42299. That means that it's only 40 points away from here. And for the market to go below the MA30, usually it will trigger a barrage of selling in the market. So that's why I suspect that if the market do sell, we may see it actually coming down to cover this gap to about 41,900 series. Okay, it is possible for the Dow Jones to go there. Yeah. Okay, so on, draw my line. Okay, all clear. All right, now let's look at the next market. It is the crude oil market. Now, some of you have been following me to buy crude oil. I say good for you. And you can see that crude oil today is trading between the 70.51 range and 69.29 range. So the thing is this, I told you because MA30 has been broken, so now the market could be going higher. So it could be doing this to go for the $70.94, which is the KCB, or you can go for the MA at 71.20. All right, up to you how you want to deploy your trips. Let me know. But like I said, today is a doji day, so anything can happen. If the market pulls back on profit taking, then I think the buy spy will be at $69.29. Okay, all clear? If okay, press number 3 right now. All right, we'll do the last one, which is the currency market, and we'll wrap it up. . Now, this is the pound yesterday. Pound did a very strong recovery trade last night because now the new diamond, we can put it in. So whatever happened is that as long the pound stays above 1.2950. Wow, okay. So as long as you stay 1.2950, you can I mean, if they stay above it itself, we can see going for 1.30042, which is the KCV here. So watch out for that 1.2950, which is where we are right now. For you to see a market significantly breaks above it, and you can go for it. Yeah. Okay. So that will be all for this morning's session. We will take a short break of 1 minute and come back for the revision side itself. Thank you.